You see that a lot of the other markets like Korea, Japan, Taiwan, they are all having a lot of good development, both in terms of the economic expansion and also they are making their own changes on the regulations to be more accommodated to the markets up to a very international standard. So absolutely, this is a change that we are seeing across Hong Kong, China, but also across the region, also globally.
For decades, global capital markets revolved around a limited number of major financial hubs. Today, capital is moving more freely across regions, not away from one market, but towards greater diversification, flexibility, and choice. As the Asian markets become increasingly prominent in the evolving market landscape, Hong Kong is re-emerging as a key hub for cross-border listings and investor activity. So what's driving this shift, and what does it mean for global markets? Joining me today are Manuel Esteve, UBS's Global Co-Head of Equity Capital Markets, Ivy Hu, UBS's Co-Head of Equity Capital Markets for Asia Pacific, and Raymond Ma, Portfolio Manager at UBS Asset Management. Welcome to Crafting Capital. Manuel, investors are showing greater openness to opportunities beyond their home markets and to investing across regions. Is this cyclical or something more structural?
So look, I think it's structural. Investors increasingly look for interesting companies globally and for leaders. And as long as their charters allow, they look wherever they may be located in the globe, and that is a structural shift.
Raymond, how do you see it?
Yeah, of course, it's very much structural. I mean, for many, many decades, money always chase the growth. And I can see for this region, we have pretty strong growth in this world compared to the world. So naturally, all the capital should also chase this kind of growth in this region.
Ivy, are Asian public markets now playing a more reliable role in growth financing?
Yeah, you see a lot of the companies come to Asia for primary listings. It's more than just liquidity events. I think it helps them scale their business, international expansions. A lot of the capital raisings are associated with announcements related to their additional M&A plans, international plans, R&D plans. So this is indeed a place that has become a very relevant place for both investors and issuers. And interestingly, you see that for some of the dual listed companies in dual listed in Asia and US, previously, people probably just use the US line, which is more liquid for fundraising. Nowadays, you see a lot of them choose to use the Asia line for the fundraisings. So yeah, it's a very interesting change in how investors and issuers perceive this market.
Manuel, could you build on that?
Yeah, I think just to add to what Ivy was saying, if you look at what this region is representing in the capital markets, it's not just some of the largest IPOs. It's also some of the largest convertibles globally. It's also some of the largest primary follow-ons globally. So that reliability is being demonstrated by the type of deals that are being run. They're not just one-off events. They are recurring events that we are seeing more and more of with greater frequency.
And also supported by the liquidity has been improving a lot. I think a lot of the exchanges are actually seeing its highest liquidity situation for decades.
Yeah, and you see, Ivy sort of pointed it out. There are less and less companies that require dual listings away from this region, so less necessity to dual list in the US or things like that. So again, that just demonstrates the reliance of the local listing as a source of future liquidity needs as companies continue to grow.
Hong Kong seems central to this story. Raymond, can you tell us what's driving its renewed role?
Yeah, and Hong Kong has been the international hub or financial center for both China and for this region, Asia. And the key thing is that, Hong Kong, for example, last year financed hundreds of billions Hong Kong dollar for those companies that came Hong Kong for placement or IPOs and et cetera, et cetera. Those companies, as investor, I'm pretty happy or to some extent very excited to see the companies come here because they are, majority of them, they are not like those companies before, like a consumer or like a textile, whatever, but they are more high tech. They are more high tech companies and AI supply chain, or the supply chain to China, or to some extent supply chain to ASEAN countries as well. So those companies demonstrate very good growth outlook and a very good margin expansion story So in that way, I think definitely we can deploy our capital much in a healthier way, or I think more happily to do so.
And seeing those new companies and sectors, Ivy, is that something you're seeing as well as part of the driver to
Yes.
this?
Yeah. So we talk about, of course, the high growth companies attracts a lot of the good money from global investors, but also it also offers a good mix of both value and growth. So that allows it to attract a broader range of investors of quality companies. Some of them even from the traditionally we think it's a mature or traditional industries, but then they are actually also extending very fast globally.
And Manuel, how are you seeing it as well?
Similar. So I think people just think of growth for growth's sake, but I think you are seeing some of the companies that are coming from this region that are not just growthy; they're actually world-class leaders in their own space.
Yeah.
And there are many verticals which are still, pretty nascent and will continue to. That's why we talked about the structural shift. That some of these verticals, like for example, robotics out of China, this is something which is it's not just there for this cycle. This should be through many cycles. And these are world-class companies. They're not just a growth differential versus somewhere else. They are true global leaders in their own space.
Yeah. Capital isn't just flowing into Asia, it's moving in multiple directions. Ivy, can you give us insights into why this is happening and what it means for global markets?
Yeah, it's interesting. You see that, for example, for Chinese companies, they used to list in the US, but now it's a lot of homecomings from US back to Hong Kong. However, we also see for some of the Southeast Asia or Japan or Korea companies that this continue to tap the US market when it makes strategic sense. So I think the pattern of the capital market flows is becoming more nuanced. And then it's driven by different factors, including investor base, sector dynamics, regulatory considerations, etc. It's just becoming a more integrated platform for the global investors.
Manuel, are we seeing new cornerstone investors in Asia?
Yeah, for sure. So again, that's just reflective of everything we've been talking about, right? Which is this shift where people are more and more confident of taking a longer term view on this in this region. And as a result, you are seeing some European investors becoming cornerstones in Asian transactions. You're seeing some of the Middle Eastern sovereign wealth funds becoming cornerstone in the transactions here. And that demonstrates that this is not just a short-term investment horizon, but a real structural, I'm going to grow. I'm going to grow my business as an investor in this part of the world. I'm going to dedicate more assets under management to this part of the world. And we continue to be not surprised because we were expecting it, but really seeing it day in, day out in the levels of interest in the primary calendar in particular.
And Raymond, you must have seen this structural change as well in terms of the way the capital flows are moving.
Yes, of course. If you compare to last year, not so many people are interested in Cornerstone. And over, last 12 months, we are seeing incremental interest in the Cornerstone, for example, and also more interest like from other places to be the Cornerstone investors. And because of their willingness to take a 6 month lockup, which I can see is a rising interest for this region, and rather than short-term participation, it's more like a long-term commitment to this region.
Manuel, who do you see as the marginal buyers shaping this cycle?
So again, it's a little bit global, and small shifts in where investors allocate their money makes big differences in terms of the participations in the deal. So we have seen U.S. investors, we have seen EMEA investors, we have seen Middle Eastern investors. So it's a little bit global. You're also seeing a number of investment firms putting more dedicated professionals locally in the region, which again sort of speaks to this tendency of greater weight in the global capital markets towards this region and in their investment portfolios as well.
And is that what you're seeing, Ivy, too?
Yeah, 100%. And besides the institutional investors, which we talk about, also we are seeing private capital money like Ps, VCs. They're participating in the Hong Kong IPOs or follow-ons. So, and then besides that, we actually also did a survey towards family offices globally. And we are seeing that they are also structurally allocating more assets into this region. So I think it's across regions and across different types of investors groups.
Ivy, you mentioned private equity there. Actually, another interesting dynamic in the markets at the moment is the split between public and private markets. How are we seeing that playing out across the region?
Yeah. So firstly, if you look at the issuers in this region, they actually go on IPOs earlier in their life cycle. So a lot of the companies which you traditionally would have thought that they would be raising funds in the PE market, in the private market, they're actually coming to the IPO market. And some of them are doing the private round and IPO round concurrently. And then you see that a lot of the private equity investors that they will look at their private rounds and IPO rounds at the same time and invest into both routes. So there is a more integrated, I think, dynamics between the private and public market.
And I think, part of the reason for that trend is not out of necessity. Companies are IPOing earlier for their financing because the market is willing to participate in these companies. So it's a bit self-fulfilling. And therefore, the way that investors are accepting these companies to IPO means that they will naturally come earlier as long as the money is there and they're getting valued appropriately and, they're trading well. So it's kind of self-fulfilling. And we expect this to really continue as long as we continue to have these high quality assets coming to market.
And it's quite different from other markets, right? This idea of staying private.
Yeah, in other markets, you are tending to see, or there is a lot of talk of the private markets really facilitating that stay private for longer. And again, I think it's probably, in some instances, it's because some of those companies want to stay private for longer. In other instances, it's because the IPO market is not quite ready in those regions for those companies. So it's a little bit of different reasons. But I think what's interesting here is that those quality companies that want to come earlier and have access to the market and have that financing, that option is there for them. And that is, that is important as we think of the future calendar and how these companies continue to finance.
How do you see it, Raymond?
Yeah, I think also look at the region that, I have some observations as well. For this market, for the private and the public, not only, the money from the traditional money, like us, also from the family, a lot from family offices. So very high interest in private as well. And also not only from this region, like Hong Kong, but also from some other countries. I would say, for example, some other countries in North Asia, and their money coming to Hong Kong for both private and public are very hot. And I give one example. Somehow in China, we have the China listed company as well as Hong Kong listed company, dual listing. Right. In general, Hong Kong listed trading at a bit of discount to mainland China listed A shares. But somehow, if you look at some companies actually trading at a premium, and those premium actually because some other countries investors really like those stocks and they buy up those stocks. So I think private and public in this region, I would say, is more closely tied up to me, and maybe similar to the United States. So, yeah.
Manuel, how important is the regulatory and market backdrop in enabling this shift?
Investors, obviously, as we discussed earlier, they need to be attracted by the assets first and foremost, but they would not be investing if they were not comfortable with the regulatory environment, with the governance environment, with all of those aspects as well. And I think, the fact that we're talking about these flows and these tendencies and these this sort of structural shift means that there is plenty of comfort with the regulatory process, the governance process, et cetera, et cetera. And again, that is something that doesn't get built overnight. This is something that has been going on for several years or decades. And, again, it's something that we are seeing, pretty much in all of the deals, that most people are incredibly comfortable with the environment that they have here.
Yeah. And Ivy, how do you see it?
Yeah, you see that recently there are more sophisticated or complicated products being offered beyond pure cash equities like IPOs and follow-on. So you also see the likes of the CBs, sometimes with concurrent buybacks or call spread. So this actually allows more flexibilities for both issuers and investors to fulfill the best of their needs and to come to the market with very sizable transactions. So number one, on the product type perspective. And also, I think the regulator has been very accommodative and making good changes to embrace the market and to attract quality issuers and investors. So, for example, Hong Kong Stock Exchange, that they have launched the tech enterprises channel, which is targeting A18C companies for IPOs. And then also they have been doing like new rules around the IPO price discovery process and also open market activities. So these are all like good changes which attracted both sides to participate more actively.
And sticking with you, Ivy, is this developing story set to be broader than Hong Kong and China?
Yeah, I'm sure because you see that a lot of the other markets like Korea, Japan, Taiwan, they are all having a lot of good development, both in terms of the economic expansion and also they are making their own changes on the regulations to be more accommodated to the markets up to a very international standard. So absolutely, this is a change that we are seeing across Hong Kong, China, but also across the region, also globally.
And what's your take on it, Raymond?
Yeah, I think for this part, totally agree with Ivy's view. And to me, because I'm basically a secondary market investor, and we invest in a lot of deals as well. And I think because I start to see actually some other companies or in other regions, but in the supply chain, they're also seeking Hong Kong's approval to get listed here. So to me, I think Hong Kong, HKEX, Hong Kong Stock Exchange, has been more encouraging such kind of financial activities to be in Hong Kong, and it's tried to fulfill its kind of responsibility as a kind of international financial hub.
We're actually seeing more European and Southeast Asia companies coming to Hong Kong as well for as a listing venue.
And that looks likely to continue. Coming to you, Manuel, what does the next phase of the global capital markets look like?
So look, clearly the most immediate future is the issuance around AI and AI related. And we are seeing that, whether it's, in the obvious AI verticals, but also in a lot of verticals, like energy, infrastructure around it, et cetera, there is going to be a lot of CapEx requirements as a result of that growth of the AI and those related sectors. So capital will be deployed in those companies. There will be a lot of deployment both in new companies IPOing, but also in ongoing primary financing requirements. So it will not just be the IPO product, but there will be a lot of follow-ons. There will be a lot of CVs. Within that, we continue to expect this region to be increasingly important from a global perspective. And as a result, we expect investors to prepare for that. And preparedness for that will be around the deployment of capital, but it will also be around basically following some of these companies that are going to be world-class leaders and investing in them for, not only for transactions, but for the very long term as a result of that, that global leadership.
Raymond, what does the next phase look like to you?
Yeah, I think for the region or for the whole market, to me, or for the economy to some extent, that last couple of years, actually the whole world or the supply chain are underinvested. And then now, because demand is so strong, both in US and both in China, the demand is so strong that it demands heavy capital deployment to invest. So in that way, I think after a couple, 2 to 3 years investment and the return of capital investment looks pretty good. This is why investors like to pay premium for these deals. Yeah.
Raymond, Manuel, Ivy, thank you so much for your insights today. As we've heard, this isn't a story about capital leaving one market for another, but about a system becoming more global, more flexible, and more interconnected. For issuers and investors alike, the rise of different destinations and capital flows will clearly continue to bring new opportunities. You've been listening to Crafting Capital, a podcast series in partnership with custom content from the Wall Street Journal and UBS. I've been your host, Nick Clark. Join us for more episodes at partners.wsj.com/UBS and be sure to subscribe on Spotify and Apple Podcasts. The content in this podcast was relevant when published. Current views may differ.